Welcome to Konexio Technical Insights. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators and the candlestick pattern on Nifty and Bank Nifty. Now first of all, let us discuss what we have discussed in our last video. In our last video, we have mentioned that the markets, the undertone, the momentum, the advanced decline ratio, overall, if we look at everything is in the direction of the market strength. Every dips was been bought at the lower levels, and there was no such kind of follow-up selling seen in the markets. Yes, though market was stuck in a congestion range of maybe 17,780 or 17,800 on the upside, and on the downside maybe 17,300 to 17,200. And last week we have seen that we have seen a breakout. Market was trending way above those particular levels, and some sort of profit booking was seen on Friday due to the weekend. But if you look at the overall charts, and which we have been discussing for a very long period of time, that the primary trend still remains to be intact, and we have been advocating for the target of 18,000 from the levels of 15,200 or 15,500, and almost we have achieved those levels. But still on the spot, on the Nifty spot, 18,000 mark has not been achieved. The recent swing high was around say 17,992 odd levels. So we are markets are well poised for to break out those 18,000 psychological mark, and once it sustains above those levels, then we might see Nifty inching towards the level of its all-time high, which is 18,604 marks. And we are confident that looking at the chart patterns, the FII datas, the index pullers, the Nifty 50 and Sensex stocks, those index pullers are showing strength, are showing indication of trend reversal on the upside. So any dips is being bought in the last what we have seen the last 2 months. So definitely markets are poised to break those 18,600 marks. And yes, last but not the least, 2 weeks or 3 weeks back we have been discussing about the golden crossover. The golden crossover is a crossover of a moving average, short-term moving average cutting the long-term moving averages from below. 50-day, 100-day moving average cutting 200-day moving average from the below, which clearly indicates that the market are poised for a mega rally for next 3 to 4 or 5 years. Yes, there might be knee-jerk reaction, there might be sharp correction, but we don't, at this juncture, we don't feel that market would correct sharply from these levels. Yes, there might be some sort of corrections, 3-4%, but we don't see a major correction or major downfall or a bear market starting from this point, until and unless there is some global event which might take down the global markets down. But looking at the current setup, the current scenario of Indian context, we feel that markets are poised to break 18,000 mark, which is the psychological levels, and if it sustains about those levels, then it might break the lifetime highs of 18,604 mark. So definitely the momentum remains to be bullish. Now let us go to the Nifty daily charts and discuss what we have observed. Let me take the Nifty daily chart so we can have a clear view about what the pattern has been and how the prices are moving from the swing low of 15,200. Let me draw a parallel channel so we can see the clear trend. Now this is the multiple support zone, you can see, and this is the resistance area. Now if we stretch this thing, we will have a clear view regarding this thing. Now clearly market are inching towards its upward trajectory. This was the congestion range of the last 2 weeks. It has been consolidating in the range of 17,800 on the upside, and on the downside, as I said, it is between 17,300 or 200. It was 17,400. We have seen a breakout. Nifty has comfortably managed to close above those levels. The closing level is 17,833. So looking at the Friday candle, we feel the closing is okay. There is nothing to worry about it. There might be some sort of cool off, but nothing to worry that it will break from these levels and all. This is the daily charts. RSI has also given a cut from below, which indicates that yes, the momentum is still intact. Now let me, for the time being, let me discuss a weekly chart. Last week we have discussed that this was the weekly chart, which was a bullish pattern, and prior to that weekly close, two weekly candles were indecisive, slightly negative, and again we were expecting that last week can be a bullish week, and it has performed. I mean to say, markets have performed on our expected lines, and Nifty has ended with a positive note with a bullish candle on the weekly charts. So looking at this chart, this rising channel making higher tops, higher bottoms, RSI is also positive, prices are showing strength. So we still indicate the momentum is bullish. Any dips should be used as a buying opportunity. So now let us discuss the important supports and resistance level in the Nifty for the next week. For the next week, the important support in the Nifty I have noted down. So let us discuss those levels. The important first support in the Nifty is placed at 17,691 is the first support. Below that, the second support is near 17,540, and third support is just near 17,401. Whereas on the upside, the first resistance is around 17,925. Above that, the second resistance is around 18,114, and third resistance is around 18,350. So these are the important supports and resistance level in Nifty. Traders are suggested to just try to look out these levels and then trade accordingly in the direction of the primary trend on the weekly basis. So now, friends, let us discuss what we have observed in Bank Nifty, and let us go to the Bank Nifty charts. On the Bank Nifty daily charts, it has made almost a similar kind of rising channel. Let me put a rising channel on the Bank Nifty daily charts so we can have a clear view regarding the particular trend, the strength in the markets. So this is the Bank Nifty charts. Currently, again, Bank Nifty is on the midway. Again, this is the daily charts. RSI has also given a positive cut. It has given a breakout of this particular congestion range. It is close way above those levels. This is the daily charts. Now let us go to a weekly chart. Again, in Bank Nifty also, last week was an engulfing bullish pattern on the weekly Bank Nifty charts. It has given a breakout. Again, a second bullish candle on Bank Nifty weekly charts, which is clearly indicates that the undertone of Bank Nifty is much more bullish than Nifty. So definitely, yes, the Bank Nifty components are the components of private sector bank as well as PSU banks, as well as in Nifty there are components of each and every sector. So we cannot compare Nifty and Bank Nifty on the similar grounds. But yes, if we just look at on the chartical basis, Bank Nifty is showing much more strength than the Nifty. But both the indices are looking positive, and overall the view should be buy on dips. Now here you can see on the Nifty Friday's candle, it has formed one sort of indecisive candle. It opened with a positive gap. It made a swing low on intraday basis. It made a swing high on intraday basis and just closed on a negative note, on a minor negative note. But overall, it was positive if we compare to the Thursday's close. So definitely we might see some sort of cool off in Bank Nifty, but that should be used as a buying opportunity, because if we see, just look on the charts, nothing else, the Bank Nifty has potential to test this particular upward resistance trend line, which is almost just coming around. If we look at, it is almost coming around 41,700 or 41,800 mark. But yes, any correction should be used as a buying opportunity. So now let us discuss the important supports and resistance level in Bank Nifty for the next week. So the first support in the Bank Nifty is placed around 40,208. These are the spot levels. If it breaks, then second support in the Bank Nifty is placed at 39,867. And if it breaks, then third support is at 39,455. Whereas on the upside, the first resistance is placed at 40,685. Above that, the second resistance is placed at 40,931 and third resistance is placed at 41,340. So these are the important supports and resistance level in Bank Nifty. Any dips should be used as a buying opportunity from these levels. So maybe we might see 1% or 1.5% of correction on the index if we see in the next week. That should be used as a buying opportunity at the lower levels. So now let us come to the third segment of our show, which is option analysis. In option analysis, we'll try to figure out, or we'll try to study the data of the option change of Nifty and Bank Nifty calls and puts, implied volatility, then open interest, rise in volumes, and all sort of data. And we'll try to figure out where could Nifty and Bank Nifty take support, and on the upside it could take resistance. So now let us see what we have observed on Nifty calls. We'll see on the screen the action was seen in 17,900 calls, then 18,000 calls, then 18,100 calls, and 18,200 calls. Now here you can see there has been the rise in volumes, there has been rise in the open interest, but there has been a minor change in there's a percentage change, minor fall in the option premiums. Implied volatility is also in the comfort zone. That means implied volatility is between 12.99 to 13.35. This percentage change, those minor correction was seen due to profit booking in Nifty on Friday, and Nifty has given an indecisive close, a flat close on Friday. So definitely we might see some sort of cool off or some sort of consolidation in Nifty looking at this data. Not much of the weakness is seen because everything is intact. Some sort of cool off could be seen, but that should be used as a buying opportunity. But looking at this data, you can see the major concentration of the open interest is in 18,000 calls, where volumes is also between 20 lakhs 94,922. So if it breaks 18,000 mark, then Nifty is poised for an upside rally, and that can stretch up to the levels of maybe 18,200 or 18,300 in the coming days, or maybe 5 to 7 trading sessions. So definitely the momentum is intact. Any dips should be used as a buying opportunity. Now let us see what we observed in Nifty puts. In Nifty puts, the action was seen in 17,700 puts, then 17,600 puts, 17,500 puts, and 17,400 puts. Now here, implied volatility is slightly higher. I'm not saying it is into danger zone, but it is slightly on the high. It is between 16.33 to 17.32. Volumes are also rising. Open interest is also rising, but one data which is showing a shedding in the open interest, you can see here, or you can see that there has been a shedding in 17,500. The shedding is of not huge quantity. It is a minor quantity, and again in 17,550 puts. This is the shedding area, but this is not significant data which have a major impact. But definitely if we look at this change in the percentage of option premium, which has indicated some sort of writing seen on the downside, but that is also not that much strong. So might be the smart money might be thinking that there might be some sort of cool off from these levels. So maybe on the downside, maybe 200 or 250 points of correction can be seen in Nifty puts. On Nifty index. So definitely on the downside, the support could be seen around 17,500 for the next week. And if it comes those levels, that should be used as a buying opportunity. Now let us come to Bank Nifty call. In Bank Nifty calls, the action was seen in 40,600 calls, then 40,900 calls, then again in 41,500 calls. So now here you can see there has been rise in the volume, there has been rise in the open interest, implied volatility is also rising. It is between 17.57 to 18.30. Again, there has been a minor positive change in mainly indicates that still the smart money is bullish on Bank Nifty, and as I said that Bank Nifty is showing much more strength than Nifty, but a minor cool off cannot be ruled out from these levels. So on the upside, maybe 40,900 could be a major resistance. If it breaks, then the next target would be around 41,500 to maybe 41,700 on the upside. So as I said, the momentum is still positive. Any dips should be used as a buying opportunity. Now let us come to the Bank Nifty put data. In Bank Nifty puts, the action was seen in 40,200 puts, then 40,000 puts, and 39,500 puts. Now here you can see there has been rise in the open interest, there have been rise in the volumes, but there has been a significant drop in percentage in the premium, in the percentage premium of the option data or option pricing. The implied volatility has entered into a danger zone. It is between 20.94 to 22.27. So as I said, if I mean to say, the smart money might had started writing Bank Nifty puts, thinking that Bank Nifty might further shoot up from these levels. So maybe we might see a minor pullback in Bank Nifty, maybe 1% or 1.5% from this, looking at this data. So definitely we feel that maybe 40,000 could be the strong support on the downside. If it breaks, then it can slide further to maybe 39,800, but not much downside is seen. And if there is a downside, that should be used as a buying opportunity. So overall, if we combine the data of charts of Nifty and Bank Nifty and option analysis, the view remains the same, that any dips should be used to buy at the lower levels. Momentum is bullish, the primary trend is positive, and Nifty and Bank Nifty are poised to break those all-time highs of October 2021. Maybe it will take 1 or 2 months, but definitely the chart patterns are indicating that both the indices are way below, are way poised for breaking the lifetime highs. But as of now, we will take a call for next week. Use any dips to buy at the lower levels. Now let us come to the third segment of our show, which is positional call. I have identified one stock from the chemical industry. The name of the stock is Clear Science. Let me go to the daily charts of the Clear Science stock. The stock has corrected from its lifetime high. It has corrected sharply. The name of the stock is Clean Science. Stock is corrected from the levels of 2,700. It is a newly listed stock. The stock has listed in August 2021, July 2021. It has rallied towards 2,700 from 1,400. Again, it has tested those levels of 1,400 mark. It has consolidated and it has formed an inverse head and shoulder pattern. Let me put an indicator RSI. So we will have a price, volume, and indicators action. Let me put a horizontal line so that we can have a clear pattern view. Now this is the daily charts. The stock has formed an inverse head and shoulder. This is the left shoulder, this is the head, and this is the right shoulder. It has given a breakout. You can see there has been the rise in the volumes. Here you can see there was a dry up of volume, and from here you can see the volumes are coming in. You can see the skyscrapers coming in of the volumes, which clearly indicates that some sort of smart money or some institution, or the strong hands are buying in the stock. It has given a breakout. So the price volume action, the indicators, everything is in the favor of a trend reversal of the stock. Now again, I would like to share one a fundamental view for the stock. When Europe is struggling with the energy, gas prices are shooting up, the chemical industry are shutting down because of the shooting up of the gas prices. Now if that thing is happening, that will impact positively on the chemical stocks of India. So if we compare fundamentals plus technicals, price volume action, everything is indicating positive trend for the stock for long term as well as the short term. So it is an inverse head and shoulder breakout. So long term investors as well as swing traders can accumulate the stock in the range of 1920, which is the current market price of the stock. If there is a correction till 1855, that should also be used as a buying opportunity. So traders should try to accumulate from the range of, or trader or investors should try to accumulate the stock in the range of 1920 till 1855 for an upside target of 2227. So 2227. So this is the area. This is the area where we have been looking out. Almost we are looking out for maybe 2250 to 2230 mark as a long-term target. So any dips should be used as a buying opportunity. One can buy at these levels also. So Clean Science is a stock which one should have in their portfolio for long term. So thank you very much, friends, for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.